What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is June 7th of 2023. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, I want to spend some time to break down all of the developments around Binance, Coinbase, and the SEC. Over the past 2 days since we did our last video, there have been a ton of charges being pressed against these companies from the Securities Exchange Commission, the biggest regulator around securities in the United States. And it's important to really dive into these charges and try to answer a big question. Does any of it hold weight? Is this something that could potentially propagate and continue a further bear market? Or is there a lot of talk and not much substance? And most importantly, I want to focus in on what I'm really concerned about here in all of this and try to be as realistic as possible. We've got a lot of things to dive into in today's video. If you guys happen to enjoy this video, consider dropping a like. It's one of the greatest ways you can support the channel. And let's go ahead and kick off the rambling. All right, I want to go ahead and start here by just talking about price action. Price action has been relatively unchanged here because we had the initial dip back here on June 5th and going into June 6th. We pretty much recovered that and are right back where we've been since back in mid-May. So what really went on here? The market right now doesn't seem to be too concerned, at least in the terms of Bitcoin, but we are seeing some general red across the board in the altcoin space. Well, this has to do with what charges are going on right now and who's to blame, essentially, under the SEC's purview. Again, this is just what the SEC is claiming. I want to get this out of the way so you guys have a full understanding about what the SEC is charging. So they dropped 13 charges on both Binance and CZ, who is the founder of Binance Exchange. And essentially, they were mainly focusing on a few key elements here. The first element is that operating Binance US, which is a US subsidiary for Binance to have a footholding in the US market and serve US users, was essentially listing a variety of securities. So this is the first major kind of accusation from the SEC. And the second one as well is that through Binance as an exchange, the original Binance.com, they were through select power users or high-level individuals offering trading services to them, to users who were abroad in the United States. So these are kind of the two big charges here. There's some other ones as well, but those are the general two big allegations here. The next thing we got to talk about is Coinbase. So with Coinbase, they're generally being charged or being accused of operating as a securities exchange, even though they do not hold a securities license in the United States, meaning that they were offering a variety of tokens that the SEC sees as securities, or maybe, for example, income products like earning interest on your stable coins. Things along these lines are what the SEC is claiming against Coinbase. That's the general allegation here. And then the last third one we've got to talk about here, and this kind of plays into what we just discussed with Coinbase, which is that the SEC lawsuits generally label up to 67 cryptocurrencies as now being securities. To see the full list of this, or to see a good overview, we can name some of these. Telegram's TON token, library credits, Omise Go, even Dash as well, which is more of a, in my view personally, more of a traditional cryptocurrency, but has been around for a very long time, so the SEC is now playing a lot of catch up. We've also got Algorand, Naga, Monolith, IHT Real Estate, Power Ledger, Chromatica, DFX Finance, AMP. Some of these are smaller, less known, but let's get into the big ones here. We've got some really big players that they put into this basket. You've got long-standing names like Dragon Chain, large players like Tron, BitTorrent, Terra USD, Luna, Mirror Protocol, Mango, Ducat, Locky. Let's really get to the big ones, as I mentioned here, just to save time. Filecoin, BNB, Binance USD, Solana, Cardano, Polygon, Cosmos, The Sandbox, Decentraland, Axie Infinity, Cody, Paragon, Airtoken, Chiliz, Flow, ICP or the Internet Computer, Near, Voyager Token, and Nexo, as well as a ton of different tokens that are in mirroring stock performance or other types of assets. Wow, that's the most comprehensive and largest list we've gotten so far from the SEC when it comes to tokens that can be labeled as securities. And when you start to basket all of those in there, it really starts to get towards a very important question of whether or not the SEC is going to define all tokens as securities. At this point, in a kind of pseudo fashion, it seems like the SEC is attempting to do that. So let's go ahead and take a step back here, because it sounds really bad. It sounds like this is going to be a major setback for the entire industry, maybe even Bitcoin. And the question is, what is this really going to mean here? I'm going to go ahead and, because we are going to spend some time to talk about the bad. I want to talk about that through this video because it is important to realize that at the end of the day, this is not going to be a good thing for the crypto space. With regulators like the SEC kind of trying to clamp down on the industry, place accusations and charges on these different companies, whether you agree with them or not, whether you like the SEC or not, it's not a good thing. However, before we talk about the bad and what I'm really concerned about, I want to talk about the good here. The good news is that at the end of the day here, the SEC, when it comes to players like Binance, is going to have probably little to no impact here because this isn't focused primarily on Binance as an exchange. It's mainly focused on Binance US for the most part. And whether or not Binance US needs to work on settling these charges or faces some fines, whatever, it is the same in the sense that we've seen with so many different players in the space that they will likely continue to operate. There will continue to be some types of, litigation. There will be continued combat going on in court between who's right and who's wrong, and basically there's going to be some resolution where they pay some fine to the SEC, a slap on the wrist, and they continue doing what they're doing. Right. The other thing as well with Coinbase, I have to say this is one of the more silly ones. Coinbase, as I will talk about later, does have some flaws as well as Binance, and we'll discuss that later on. Just at least some things that I'm not gonna play privy to defending these companies 24/7. We got to talk about that later on. But I have to say Coinbase's charge just really doesn't make sense. Coinbase itself filed with the SEC to conduct an initial public offering. And the SEC at the time, back in 2021, decided to approve that IPO. Yet at the same time, the SEC, which is supposed to protect investors through registering securities, i.e. companies like Coinbase, is now accusing that Coinbase has been listing securities time and time again throughout its history, back since I think around 2018 or 2019. Don't quote me on the exact year, but that's the claim here. So either the SEC isn't really doing its job or, we're missing something here, right? So these charges, really some of the things they're going after here, claiming that both Binance through its US entity and Coinbase, of course, with its focus in the US market, are listing some of these, a variety of different securities, of course, according to the new definitions from the SEC. I think the problem you're gonna run into here, whether for better or for worse, and that is that the United States has yet to put together a proper format or understanding or guardrails to understand what kind of token could be labeled as a security, what qualities make it a security. Now, I understand people will point towards the Howey test, but I think that this is a really bad argument here. And I'm again gonna give some defense here towards companies like Coinbase or Binance here, that essentially, that the fact that the SEC comes out here and just randomly labels a ton of random tokens, many of which are not the worst players in this space as securities, some of them that are random. It just seems so random here. Why did the SEC pick these, right? And the problem is that there's no actual guardrail framework other than the Howey test for projects to try to determine whether or not they're breaking the law in the SEC's eye, or they're actually doing something that they feel is productive, within line, within regulations. And herein lies one of the biggest problems and one of the biggest farces that the SEC is trying to just kind of play off here. So many of these tokens have been around forever. Why push it now? Why do it when you're going after Coinbase and Binance, which you accuse they've been doing this for years and years? It just really looks pathetic. And it not only does two things. One, it shows just how weak the enforcement agency has been in the United States at actually protecting investors. So little, too late. But on top of that as well, the biggest problem here is that still we don't have any framework about which projects are doing things right and which aren't. These tokens are so broad and definitive and unique. Give us some guardrails about what it actually means to create a security. Anyways, I've rambled on a good amount here. You guys probably resonate with this to a large extent. I want to go ahead and make it clear that I think that Coinbase and Binance, they are going to be able to survive this, and they're going to be able, whether they continue to service the US market or not, that's a question we've got to discuss as we go through the video. But I think that they're going to exist, and I think crypto will always exist to some degree. I don't think there's going to be some complete shutout of the industry, right? And that's coming from someone who, as you guys know, has been a bear over the past couple months, coming up on a year here in August when we sold our positions, right? I get that a lot of people are really irritated by this and are annoyed by it. And to be honest, coming from the States, coming as a U.S. citizen, I mean, it's really shameful if we want to be at the cutting edge of innovation. But I have to tell you guys the one truth here. And this is something that I think is going to be uncomfortable. It's something that I might upset some people by saying. But I'm going to be honest with you guys, because at the end of the day, the SEC is not some boogeyman. While they are obviously not enforcing regulations as I would like them to, and I think that what they're doing is a very immature way to actually try to regulate this emerging industry that could have some potential and bring economic value, especially in my home country of the United States, I think that there is some justification behind what the SEC is charging, or at least that some of these projects could be labeled as securities or essentially are not operating in a well-intentioned manner. I know that that might sound a bit kind of like a broad stroke to put on the industry, but let's be honest, guys. I think all of us have been impacted by it to some degree. I'm not saying that, we invested in a project or something and it didn't work out and now we get to be upset about it. I'm saying that there were a lot of projects out there in the crypto space who rode narratives, who raised large sums of money for one matter, but on top of that, basically just listed tokens out there with little to no fundamental value, little to no plans of actually generating some form of revenue or demand for the token, and raised millions, if not billions of dollars, and then also made millions, if not billions of dollars more by dumping that token or distributing it slowly on unsuspecting buyers. I mean, again, easier said now than back then, but let's be realistic about it. There is some reason why regulators need to step into this space. And you need not look further than the only token that's trending in the crypto space being Pepe coin or other meme coins. It is absolutely ridiculous that this industry, after the 5 years we have been covering it here on this channel, almost coming up on 6 years since 2017, has produced little to no value. I think the only thing we can say that has created real value in this space beyond Bitcoin being this potential store of value, which Bitcoin is obviously not a security by this point, even in the view of the SEC, is maybe DeFi. And DeFi has been stagnant for the last 2 years. What do we have to show for it? And this brings me back here towards this topic of the SEC deeming these securities, deeming these tokens as securities. We've got to talk about the altcoin space, guys, because Bitcoin, as you can see here, is relatively unaffected. And I would assume that liquidity flows will actually kind of remain strong as people are potentially unloading their altcoin positions back into Bitcoin through BTC pairs. But the big point I want to drive here is that altcoins are in a really bad position, and they will continue to be in a bad position. This is why we have been talking for months here on the channel. This is why back in August of last year in 2022, we unloaded positions up here towards this $300 billion position. And we are very well off because of selling those positions here. I know a lot of people are like, oh, Nick, Bitcoin continued to rally higher from where you might have sold your position. Yeah, but we were mainly exposed to altcoins, like a lot of participants in the space, and we sold at much greater valuations. Many of the altcoins we sold during that period of time are nowhere near those same valuations as we are down at 228 billion in the terms of market cap when you exclude ETH, when you exclude stablecoins, and just focus on all of the remaining market capitalization for altcoins. We're down practically from those relative highs at 330 billion, we're down over $100 billion here for the altcoin market. And we've had that red flip here since back in May, signaling that even though Bitcoin might have been showing some resiliency, that altcoins were getting weaker and they are looking for lower price levels, guys. And I want to make it very clear here that whether or not you agree with Coinbase, whether or not you agree with Binance, or if you agree with the SEC, no matter where you stand in this argument, this security labeling is going to make all other exchanges, even if not Coinbase, it is going to make all other respected exchanges like Bitstamp, it's going to make exchanges like Kraken, and all other spot exchanges start to freeze listing of these tokens, and more specifically, start to potentially remove them. I have no doubt that this is going to play out to some degree, and that is going to dry up liquidity. It is going to make investors themselves concerned if they aren't already, and we are going to see a continued contraction in altcoins. But it's not just because of the regulators, guys. We can't just say that this is the only reason to be concerned about altcoins. We got to face the reality here. What is the narrative? What applications are there to look forward to? This is where I get really frustrated. And yes, I'm gonna ramble a bit. I'm gonna get a bit opinionated. What do we have to show for in the altcoin space here over these past couple of years? It is the biggest shame in this industry with how much money has been poured into ICOs, IEOs, even doing fair launches, all these projects out there that have some kind of weighted market cap. What do we have to show for it? And I know some people will say the time test argument, oh, Nick, history is just going to repeat itself. People like to speculate, and people should have the right to speculate. I'm not completely against that argument, guys, but it's not productive. And at that point, crypto is essentially a casino. And as we can probably guess, there needs to be some degree of regulation on that if that's going to be the case. If we are not trying to create value here, if there are nefarious actors and ways in which nefarious actors continuously pry on everyday individuals, I'm not saying that the SEC is the outlet for this in all cases. It's not. It doesn't have jurisdiction to completely write new laws. It doesn't have the jurisdiction to enforce on all things, only securities. That's why it's the Securities Exchange Commission. But let's be honest here, guys. This is a really failed state that crypto is in at the moment. And I'm not just being some perma-bear. The market's showing it here. Altcoins have not really been able to make new relative highs. Since as far back as November, we constantly set in new lows. There's good reason for that. The smart money is taking chips off the table whenever they can. That's why we did it in August, because there's nothing being created that is going to transform the crypto industry right now. DeFi has really been dead for the last couple of years. There are a few projects we like here and we talk about in the channel, but I'm talking about the broad stroke of the industry, guys. Like, what's an application you've used in the past week in the crypto space? Other than maybe Uniswap or Compound. I would bet money that the vast majority of us don't even use those applications right now when the market's not hot. And here lies the issue that so much of the innovation in crypto relies on optimism, momentum, and price going up over time. And this is where the SEC does have, I think, some decent jurisdiction to come in and point out that, hey, a lot of people raised a lot of money in crypto offerings. And not to mention, a lot of people made a lot of money off of selling these assets and distributing them slowly but steadily over time, not to disturb price too much, and making boatloads of free money behind the scenes, not being transparent about when the team was selling, not being transparent when money was being made. Paying big salaries, walking away with a lot of money that a lot of people worked hard for at the end of the day. This is where the SEC, I think, has some degree to step into. So the summary is this, at the end of the day, guys. Whether or not you think Binance is in the right or wrong here, I think at the end of the day, we got to be concerned that we are going to be seeing some haircuts in these tokens. We are going to be seeing against Bitcoin, I think, Binance coming towards this kind of, 0.005 range here, so about a 50% correction against Bitcoin. Again, you don't need me to tell you guys this. Like, just take a look at the charts here. Does this chart look like it's going to be bouncing back up towards its all-time highs, or is it more likely to come down here towards 1,000, satoshis, or fraction, basically a third of where it's sitting right now against Bitcoin? And just take a look at these charts, guys. You don't need me to scream to the roof here. Arbitrum as well, right? This has been one of the top momentum, top layer 2 plays. It's been flat since back here in March. It's been declining substantially since back in April. Cardano as well has been bleeding since September 2021 against Bitcoin. It has only continued to do so since then, and looks like it's steadfast towards another 33% correction down towards the 800 point range here. Hopefully, maybe finding some line of support here. We have been beating it like a dead horse over the past couple of months that if we're going to be averaging into the market, it is going to be predominantly in established plays like Bitcoin or Ethereum. And having a bit of exposure to some of those altcoins that we think are going to be able to win out in the long term. But the fact of the matter is, guys, is that a lot of these plays are going to continue bleeding out against Bitcoin. I think this is not your typical altcoin correction. It's not only going to be in line with typical altcoin corrections, but it could go even further. And those differences between a, say, 90% correction and a 95% correction from top to bottom are very different and very distinct and much more brutal. All right, so just trying to be very clear here, guys, because there are three layers here at play that are setting back the altcoin space. You've got regulators. I'd say that's the low-end concern. There will be updated frameworks, projects that have already launched. I would say even plays like XRP, for example, that have gone through this whole SEC litigation. The fact of the matter is that they were projects that launched a long time ago, and they're going to probably be grandfathered in to some degree. The secondary concern, I'd say the mid-level concern, is that there just isn't much new development going on. There isn't much exciting things going on in this space comparative to, say, back a couple years ago. And I think there are definitely some exceptions to this which could survive and could do really well and potentially fix a lot of the issues of the crypto space, some of which we've talked about here on this channel. And last but not least, the big concern that we didn't even discuss here in today's video, but we did discuss in this month's newsletter, is liquidity contraction. Now, if you guys have not checked out the Dash report yet, I'll leave a link down below in the description. You can get 20% off on an annual basis. It's one of the greatest ways you can support the channel, and most importantly, you guys will not only get access to our newsletter, but our key momentum indicator that we utilize, the red-blue indicator that we use on the weekly and monthly time frame, as well as the daily time frame to spot trend reversals. But you'll get access to the Dash report discussion group, our mid-month webinar, which will be coming up in about a week from now, as well as exclusive market updates and other types of cool content that we put out. It's one of the greatest ways you guys can not only support the channel, but it's a great way to get deeper analysis and understand why we understand the market the way we do, why we hold the sentiment that we have. And it's, again, going to explain what we're actually going to be doing. You guys will also get those trade alerts and get an understanding of where we're positioned in the market. But that all being realized, guys, again, I think the takeaway from all of this is that we've got to be cautious. We've got to understand that the next couple of years are going to be a lot more difficult than the typical bear market that we've seen before. And if we're talking about percentage declines, it likely means that we've got a long way to go. So if you guys enjoyed this video, consider dropping a like. Again, one of the greatest ways you can support the channel. And thank you for giving me some time to ramble as always. I hope this video proved valuable. And until the next one, everyone, I'll see you all on Friday. Take care, everyone.